Thank you. I think it's a powerful way to...
Amen. Thank you for that one.
See, I like it. Whoever said that, thank you. I didn't see your name pop up, but thank you. For real. Someone's got some background noise real quick. Let me manage the participants and mute everybody. Ta-da. There we go. Someone sounds like they're fiddling with something. Lord knows if I wasn't sitting in front of my computer, I would probably be the one fiddling with something. So no hard feelings. Just try to keep yourself muted. Okay, first and foremost, is anybody brand new, like needs me to definitely go over every single thing? Has everyone reasonably been here a couple of times, or with all due respect, maybe has listened to a few videos? Because I promise you, it's the same thing. I think going once. I know there's a little lag, so I gotta pause, but I got a few minute late start too, so. Well, with no one jumping out and saying, hey, I'm brand new, I desperately need to know everything, we're just going to skip straight to the disclaimer. So bottom line, you guys know that I am legally not allowed to say about 5,000 things, most of which I probably get wrong at least 50% of the time. So the disclaimer is this call is for educational purposes. And everything I say is only meant for educational purposes. So I'm not your financial advisor, even if I used words that were not just saying I do this. Make sure that you know that anything we discuss is only education and that's it. So I'm not your financial advisor, your tax accountant, and all the other good stuff. So having said that, I will do my best to make sure I phrase things properly in terms of saying this is what I would do versus you should try this. So anyways, order of operations, you guys kind of know the drill. As this goes on, hey, Brian, welcome. Just so you know, we're pretty open. You can come out and talk for the most part. If we interrupt you for a trade, no hard feelings. But also, if it's your first call, please don't take any signals. I promise you the pips will be here tomorrow. And the more often you realize that the pips will be here tomorrow, the less mistakes you'll make. So if it's your first call, just don't take any trades yet. No, because you might not understand the flow and the speed of conversation and what we're doing exactly. So maybe skip out on jumping in on those trades. Just kind of watch, and win, lose, or draw, you learn something, even if you didn't gain pips. So please avoid taking a trade if it's your very first call. Anyhow, as you guys know, order of operations, we're looking for a couple of trades. As we get closer, next week is the election and NFP. The markets are going to do all kinds of things. We don't know. It could do nothing. I mean, so it's all potential and it's all perception, but needless to say, I'd like everyone to truly be ready for some massive moves. And when I say be ready, I mean, maybe have your account loaded, maybe have an ATM loaded, because the ATM at least will protect you. It will protect you if the market spikes insanely. And these kind of spikes that we could end up seeing are the ones that move so fast, the broker's not even liable for blowing the account. Like, so if it blew past your, stuff, for example, whereas like the ATM has the potential to at least limit your risk. So I cannot stress enough, this is a great time to get that on. You can use some pretty general or generic settings even, but have something to back up what you have in your account, because any one thing could come out in the news and it could skyrocket and drop so fast that your account is blown before the stop losses and, everything else even matters.
I highly recommend you have it set to use broker stop losses, not hidden.
Ooh, thank you. That's a big deal. Because then if it's broker stop loss and you go to negotiate with your broker, you have some wiggle room there liability wise. But if it's hidden, you have no wiggle room to negotiate with your broker. So.
And there's the opportunity for slippage and really fast movement.
Yes. So just as the days go on, including today, I need you guys to be super prepared. Having said that, we are traders, we're investors. So we make money on this volume. We make money on this volatility. So in theory, we should be able to come out of these next few weeks pretty good, following the trend. Our job is never to predict the market. We can have our opinions and our biases, but we need to leave those out of our actions. Like, that is the most important thing I can say right now. So for everybody who's been on here brand new, just take a screenshot of these. I'm not going to go over everything. I will say we're looking for a couple of trades. I don't know. Today, the market's definitely moving down, but we popped up real quick. So I don't know how I feel about the structure this morning, but we will take a look and honor that. Please know that your stop loss should, in theory, be above or below structure. And that is your way to be. You can obviously choose to get in and out based off of market conditions sorry, not market conditions, but chart, if your rules that got you in get you out, any of these things right here. If the price crosses on the other side of the 50, for example, you can get out, or if it's close enough to structure, let it play out and see if you were right. So all that stuff you guys have heard. If not, take a screenshot. We're looking for a couple of trades pretty much. Indicators, again, this is pretty simple. This is one of many strategies. It's just one that happens to work. And the biggest reason why it works really well is because it's trending. So you're going to get beat up a little bit in, consolidation. But for the most part, when you're going with the market, you're going the right way. So it's a really good way to trade, across the board in terms of human trading, not bot trading. So please take a screenshot of this. Next is the strategy. Again, I wish this was more complicated. And I know that I joked a few weeks ago about, 4 + 4 equals 8, but sometimes it equals, you got to add 1.5, because there are some variables that say structure and that say, if the next candle doesn't make a higher high, there are some things that will get you in or get you out, but this is the basic. This is the baseline strategy, and it's changing people's lives. And for that, I could not be more grateful. So as simple as it sounds, and almost like it's elementary, please consider listening to this. Please. So last but not least, how to compound. I would definitely back off on going for the gold in terms of compounding the next few weeks. I'd much rather you say, hey, I'm going to do my slow and steady. I'm going to do my safe compounding. I'm going to limit my risk on these trades. So you still trade, but just don't go for 10, 20, 30%. You can still trade, but just don't risk 10, 20, 30%. So as you guys know, I'm all for the, hey, I'm willing to blow some small accounts, but in the coming weeks, that might not be the best idea, because it could just, anything could happen. So there you go. But this is kind of how you compound. Again, looks elementary, but if it can change your life, some people go to college for 5-6 years to get this little, tiny little step of order of operations for their corporate America job. And they're thinking, wow, I spent 5 years and, multiple 6 figures on this college degree to learn how to do this. Okay. It's kind of same concept. So don't undermine how simple and doable this is, even if it is very, very simple. So any questions on any of that so far? Any at all? Let's see. What about you, new guy, Brian, Mr. Brian?
Oh, no, I'm fine, J Money.
Okay. Oh, there you go. I could deal with that one. It sounds a little hood, but I could deal with that. So I could deal with that. Hey, I'm from the hood. You guys, I'm from Colorado Springs, this little nothing area. Y'all see it, you'd be, that's where I'm from. So that is my real. Okay, well, I'm not going to go to TradingView this morning. I did do that yesterday. So there was a couple of questions in the chat about, head and shoulders patterns and what that equals. If you don't know what a pattern is, I highly recommend you look that up. So what we're seeing on most of these daily time frame on the indices is more M formations, double tops, potential harmonic patterns. Remember, harmonic patterns are certain number sets. They have to qualify at certain numbers to qualify as a harmonic pattern. So that's what you're seeing. Most of these are not, at least not on this time frame anyways, head and shoulders. So just to clarify. Now, I do want to start with a fresh, clean place. I know I try not to delete these lines if I'm not live with you, just so you guys can see the accuracy and how they're respected over time. So now that I'm live with you, I am going to go ahead and right click, delete all these little loving lines we have here. And we're going to start with the fresh canvas. So as you guys can see, we've got kind of like double top formation as soon as my computer decides to listen to me. Maybe. Okay, we've got this kind of almost double top formation. If we break this neckline, this is a huge time frame. The middle, I don't know, neckline is the wrong word. That's my fault. But the middle, the theory behind these double tops and M formations, which isn't exactly straight, just so we're on the same page, some people would not count this, is that you're going to get approximately this much of a move. So you take the second leg, okay, this middle part, and that's approximately how many pips it has the potential of. So you're looking at anywhere in and around here is what we'd be looking for if we get these huge volume moves to the downside. Now, remember, our job is never to predict the market. That is never our job. Ever. So just as long as you know that, then you can trade safely. We are looking like we have a ton of pressure down. No guarantees, but now I'm going to zoom in a little bit and look at some of these wicks. Notice how this move up is much smoother. You have a lot more bodies in your candles. You have wicks, of course, because the market has to react. But notice all the bodies in these moves up. Please also notice all these wicks. And it could be just the economic climate and the election and COVID. Then we have to consider that. But all these wicks are saying that this move down isn't nearly as powerful, right? It's not as strong. So that's not opinion, that's just basic price fluctuation. Now, if we look at this last candle, this candle from yesterday, that is a full body engulfing powerful momentum candle. So we've already retested approximately half of it. So now it's anyone's game. But again, analyzing this on a daily time frame, we're looking like we have these are bottoms. So again, this is anybody. Hey, we've got some background noise, people. Hold on, let me mute. Donna, if you could. Sorry, Scott, I muted you. I apologize.
I was just going to identify the culprit.
Oh, you're going to call him out. Guilty, guilty. So this is what I'm seeing. And I want to do this on the bigger time frame because this is how big the moves potentially could be. No guarantees. So big candle. We've already retested half of it. That would be an indication of a continuation of the downside. So again, we're just taking all this accumulative information. We've already retested half of it. However, we've got 2 baby wicks to the bottom, which almost qualifies as tweezer bottoms. So there's so much information here. Trying to dissect it and decide what's relevant is super important. So now that we went through all that bigger time frame possibility, remember this one does not have a gap to the upside. And if I went one more time frame up, and now I'm going to zoom in. Okay, a little bit more. Again, that's the weekly time frame. So anything goes, anything is possible. Just to kind of give you an idea, we still are at all-time highs. So with COVID and the stuff, just kind of be prepared for that. So now let's go down to a more reasonable, reliable time frame and kind of take a look at what we're seeing. We've got it's bouncing off the bottom. We're getting a push to the upside. So we don't know quite yet what that's going to be because again, we could buy. Technically, we may find some buys, but that's a huge counter trend trade. And I don't know if that's the best move at this point in this market. So 30-minute time frame bouncing off the bottom, almost double bottom kind of formation. But again, we're still below the 50. We're still below everything. And this is where traders are getting into trouble because even, people try to do that. God, I forget the name, but the guy who times bottoms and then takes another entry and positions it in. I think it's Martin something. Anybody know who that is?
There are many people who do that. So
Many, but one of them is infinite. It's like saying he has a really good mathematical sound rule-based system that would in theory work if you could be inhuman enough. So, but whatever that guy's name is, this is where that whole strategy fails, is because as we continue going down, we're still in seller's territory. We want to buy. Sure, I want to buy it, but we don't have a clear reason, at least not on these higher time frames, to do so. So I'm going to pop down one more, guys. I think that is the 15-minute already. So I'm not going to go much lower than that. I'm going to keep it there. Maybe. I have no idea what makes this happen sometimes. Where it works just fine and then all of a sudden my Zoom box is all weird. So that's what we're seeing. Remember, these trend lines are here for approximation, just to help you learn to see trends. They do move, they do adjust, but they're just meant to be a baseline. So treat them as such. I am going to say that not necessarily that we break this trend line. We would have to really finish this formation, break out and retest to have the safest buys. And that doesn't mean we might not get a few scalps in between this whole area, up or down. I'm just saying, before you consider this to be a safe buy, what you would really want to see happen is a breakout, momentum, powerful move, retest, and continuation. So all of this area right here needs to be retested and more, but just sticking with what's on the chart right now. So anybody have any questions, comments on NAS? Anybody at all? Love it when you guys are so talkative. God gave me something, though, let me tell you. He gave me something to be able to sit up here and just talk to myself and not feel like a crazy person.
Morning, Jenny.
We're listening.
Oh, Jenny, you're not crazy. I talk to myself all the time.
Right.
They say you're only crazy if you answer yourself back.
Well, I kind of am.
Jenny, before I let you go.
Let's see how quickly we all came out to talk.
There you go.
Before I let you go, Jenny, those trees are bottoms.
Yes, sir.
What are they likely to mean?
So that would mean a push to the upside. So there's a lot of conflicting information on this. And remember, people have so many varying definitions of what is what. And that's why I try to be super open-minded when I teach you guys stuff. So this right here, now wicks would have to be very close to even to be considered tweezer bottoms. But
I would consider they need to be longer as well.
And most people would consider them to need to be a lot longer. So most of the time when you're considering tweezer bottoms as a reversal signal, they're not measuring the candle so much. They don't care as much about the candle. They do care about the wicks, and they care about the length of the wicks and the fact that they're approximately even. And that means like the open of this candle, so the close of this purple candle and the open of this candle is almost in the same spot, approximately. You know, the wicks are a little bit longer and they're approximately the same size. They don't have to be the exact same, but we're talking approximate. That's usually how you identify a tweezer bottom, which is a reversal signal. So you've got this momentum impulse candle plus a retest of 50%. That is a continuation. That's saying the most relevant and recent, you know, movement on this chart is down. But then you start looking and you dissecting a little bit more and you're saying, well, wait a minute. Okay, there's also this potential. So does it qualify? I don't know. You know, it depends on who you're asking and who's measuring with what measuring stick, and that's that. Fair enough.
Well, thank you for that. So if I were faced with that situation, I'll just wait and get more confirmation before I jump to the upside.
Yes. So that's what I was saying. So all of us wants to buy, like everyone wants to buy, everyone wants to sell, everyone wants to be in these trades. But for the buy, we would really need a breakout and a retest. So we need something with momentum. Because
look at the degree of momentum coming down there. That means that's a huge move, huge move. And in order to take a reversal off of that, you have to overcome all of that momentum.
That's huge.
I think Scott just said that really well. So I like what he said, that you have to overcome the momentum. And I don't think a lot of people talk that way, right? You have to consider like the avalanche falling down the mountain. You have to somehow have the strength in whatever happens to overcome the power of that avalanche. If you think of it like that, you know, and the rocket, if it's going up, you have to overcome the force that's pushing this down, which is a lot to ask in today's current climate. So it's kind of a steep order.
But we do have a zone sitting right down in here. And, you know, instead of thinking in terms of candle patterns, I also like to think in terms of what's the story? You know, price pushes down and it rejects. Price pushes back into it and it rejects. Price pushes into it again and it moves way up. You know, so what's happening here? You know, people are selling into this and finally it bounces back up. It comes up to a point where it turns around rapidly. You know, so price is moving up here and it bounces out. It can't even make it as high. And it bounces down even further, pushes up a little bit. But look how weak it is pushing back up as opposed to how strong it came down up here. So another strong push, a very weak, you know, they're starting to fight each other. And then a strong move, retrace, but it doesn't make it as high as this. And a strong move down. You know, so think in terms of how fast are the sellers moving, how fast are the buyers moving. And also, what time of day is it?
Right. So this line right here that I drew, I'm not sure if that's the center of that formation. It's still a little high to be the center. So I'll draw one more line on this call being Thursday, and I won't mess with this all week. I don't love all those wicks, but I'll draw one more line. So if we do, this would be a huge zone, but that's what's possible. And if we break this, you're talking a huge drop. And that's it. In general markets, it would take something massive to make this happen in a short period of time. But in this market, over the next few weeks, this could happen fast.
I like that level.
This level.
Yeah.
I like it because that's where the body closes. So like if I went to the line chart, so if I were to draw that a little bit more accurately, I would go to the line chart.
Well, what you got here is you have wicks above, you know,
Below.
and you have wicks below.
Yeah.
And, you know, that to me feels accurate.
So that's where my line chart would be. Looky, that's almost dead on where my line chart would be. Because if you go off of the wicks, guys, and that's where I get into trouble, most people get into trouble, is you see things differently. But this is where the bodies and most of the power stops. The wicks are just, you know, market foolery. So
think of your lines. You know, I've used this before. It's like a pillow. You can push into the pillow, but once momentum stops, it sits on the surface of the pillow.
But I need you guys to picture money coming out of pillows. Just picture the same thing. That's what I'm picturing.
Yeah, don't push money into the pillow.
Money pillow.
Like when you pounce on it, like imagine feathers popping up. Imagine just $100 bills popping up. Come on, I'm not the only one who saw that. But all right, that's enough on NAS. I don't want to stay on NAS too long. German 30 isn't as affected by the open of the US, so I'm going to skip that actually for a moment. Let's go to US 30 first. So big. This is the daily time frame. We're already here. So now I'm going to zoom back in and get it a little bit cleaner. Again, comparable story, guys. We're at the bottom of this M formation. This one has formed an official harmonic, is my understanding from all the little tools and stuff. It's got so much potential. Having said that, again, everything we do and don't do is very, very risky. Huge move. None of it's been retested. None of it's been given back. So you have some potential. And if we recall, there's a tiny little baby gap up here, which I don't think is significant compared to COVID and the election and stuff. I'm just saying it's potential. I'm not saying we're going there. I'm just saying there's potential. So
I thought that was a store.
Right. What?
Baby Gap.
Baby Gap. It is a store. I've never shopped at Baby Gap. No more babies for me. But it is a store. So again, same thing. We broke below that kind of if we went to the line chart. So that's what we're looking at. We are definitely pushing down. Now this one, we have not pushed back up any. We haven't really given any back. So we have so much potential. I kind of wish these boxes weren't in the way so we could see this a little bit more clearly, but we're going to have to deal with what is and kind of work with what we've got. Going off the idea of a measured move, we have over 26,000 pips, I believe is the number. I could be wrong, but that's my understanding. Opening candle is happening here in a second and I might miss it, but currently I'm going to go to a smaller time frame. So we already know there's like 20,000 pips to the downside. So I'm going to go to a smaller time frame, kind of get an idea. We did make a lower low. We broke below yesterday's low and kissed the EDR low too. Now, again, we're at this area with all these wicks. So your safest entries on this pair are sells. And right now we're selling. So anything we do that's not selling is considered the risky counter trend move. So the only way we would consider buying this is if we got some impulse move, which has to break here, and a correction. Otherwise, we're staying with the sells. And again, in this market, we want to be super protective. So I just wanted to do that really fast before we missed it. S&P affected by our US Open. It's looking like German 30 is dropping a little bit on the 1 minute time frame. Now I'm going to talk really fast, and I already talked too fast. So S&P comparable to US 30. We're in a seller's market. We're only looking for sells until we're given a reason not to. And that reason needs to be a pump. And I mean a big pump and a retest. That needs to break here. So now I'm going to go German 30, one of my favorites. German 30 and US 30 just have been very good to me. Very, very good to me. I will not complain. This one, on the other hand, has a little bit more stopping power than even the other pairs do. We did get some signals to start buying, and we're failing to make lower lows. But again, we don't have any confirmation. Unless we're a reversal trader, unless we are timing bottoms, trend-based traders are not looking for buys. This is still a selling market. It doesn't mean we might not get the pump up, but a trend-based trader, before they'd be willing to buy this, would wait for the breakout and a retest. And that breakout would need to break this zone. This zone right here. Well, I mean, if we want an exact, remember, I'm just drawing the line, approximately, but in and around here. And I'd much rather this one be a box. Come on, baby. Just won't move. Silly. I don't know why it does that. Zoom is just funny. It's looking like the US candle open is pushing down, but not enough volume. We might get this push to the upside. I'm sorry, but I'm not ready to take that trade because I didn't go over the other charts and I don't have it up properly. So that one I'm going to have to miss out on. If you guys know your strategy, you guys can feel welcome to take it. So there we go. Push to the upside, 1 minute time frame. We'd have to close pretty high before we wanted to chase that trade. So now that we've got it on this time frame, we can pop to the 5 minute. Just to clarify, we're going over the 1 minute and the 5 minute. 50 is kind of what we're seeing now. That's the 5 minute 50. That's perfect. That's exactly what we'd want kind of to see. Since I missed this move, that's fine. I can wait for the retest and go. So I'm going to take fractals off of it. Well, I guess I'll skip it. Uh-oh. My computer's not playing nice, guys. It's not giving me control. Y'all see my mouse, right?
Yep.
Yeah, it does that sometimes when I'm on the VPS, like it won't allow me to do certain things. It's very strange. Double bottom, 5-minute time frame. So what we were waiting for a signal here. We don't have one. 5-minute time frame. I want to right click and take fractals off. Delete, too much noise. Close. That's the opening bell candle. So we could get enough to even push up a little bit. That would be the hope, is just to get enough to get a trade out of it. But as long as you guys know it's a counter trend trade, it is 100% against the trade, the trend. So German 30, no quite move yet. No quite move yet. This one you definitely need to be on the 1-minute time frame, or 5-minute time frame. We're gonna go here, 1-minute time frame, and see what we've got. We've got nothing. Bear with me. Okay. Anybody seeing any of the pairs move in a way that we can clearly follow it? I'll check out gold real quick. Gold. Because I'm not seeing that. German 30 is pushing down. It would need to break that low. US 30, this is opening candle. Again, needs to break this area. This pair has room technically, but it would need to break, and that's not worth it. So it's breaking a major fractal. I see it wicking off of there. Notice how NAS and US 30 did two opposite things. Well, reasonably different things, which has not been the case for quite a while, and it's becoming the case more and more consistently lately. Anybody else noticing that, or just me?
Yeah, I've been noticing that.
Yeah, so have I.
Okay, just something's brewing, so it means we can't try to trade correlated. We got to protect ourselves. So definitely got to protect ourselves. NAS is looking like it has the potential to continue to the upside. US 30, I mean, it has room. Personally, let's measure from where it's at. I'm not going to measure from the actual body. I'll measure from the top of that fractal. That's 600 pips to here, 400 pips to here. So you have some room if we wanted to take that kind of risky counter trend trade on US 30, but you have to be able to do it super, super well. And Scott's pointing out the box of rejection and the wick and the wick.
And notice that it's stripped below the box and pushed back up. That can be the spring that you need. There's sellers down here. I mean, buyers down there. And it pushes down deeper into the buyers, triggers more orders, and makes a move. But we're not getting a lot of follow through.
It's just a little choppy today, which is what I was seeing this morning. So learning when to trade and learning when not to trade is super important. So I do have another screen off of here that I've got a couple of pairs up for. So I am looking, just so you guys know, but I don't love the clarity. I'm looking at German 30, 1-minute time frame. It has to make a way lower low or a higher high to be valid. I'm looking at NAS. NAS broke above both 5-minute time frames. We're not quite sufficient enough to get an arrow. I mean, NAS looks like probably the safest bet at this point in comparison to the other two indices. I'm a little apprehensive seeing US 30 fall so much and then NAS not pick a direction. Not super happy about that. Real quick, let's go to NAS on this and see. Oh, was that for US 30?
Yeah, that's okay.
Sorry. Just tell me if I do that. This one looks the clearest. And I don't even love it, just to be super transparent. Again, it's against the trend. It's just the clearest at this time for what I'm seeing. So we've got this impulse move. Let's wait for the correction. Let's not just jump the gun. We all want our pips, but let's not just take this first, move and wait for the retest. So it might be.
Is there a gap right there on NAS?
No, I don't see it.
Oh, okay. Yeah.
Like in these current candles, do I see a gap?
Yeah, exactly. 5-minute counter right before it was a gap.
I don't see. I mean, I can
Okay.
a smaller time frame.
You're talking about right here?
No, right at the top of that candle, there was a gap.
Right here? No, don't see it here.
Okay. All right. Must be me.
Are you on the 1 minute?
I am on the 1 minute. Yep.
Sometimes, you know, if do you have anything that shows you the width of the spread?
Just don't love it.
Sometimes it can make a jump by the spread size. And
Okay.
it'll look a little bit like a gap. You know, look at the size of Jenny's spread down here and look at that, you know, from the top of that big bullish candle to the open of the bearish candle. It's about the spread.
I see. Okay.
That's normal. And if you're trading on a higher spread broker or a higher spread pair, you'll see it a lot.
Mm.
Yeah, with a lot of vectoring up there right now.
Tons of vectoring. US 30 dropped pretty good. German 30 dropped pretty good. But I don't love any of these at this moment. If somebody sees something I don't, by all means, come, let's discuss. I just don't love what I'm seeing this morning. Good place to sell now. Jamal, no. So let me look at German US 30. I don't know how many minutes ago you sent that. Like, that was when we said, look, you're following the strategy. The sells are the safest. Follow the sells. Up here, that's a good place to sell. At this break even, good place to sell. Right here, not a good place to sell. So we're first off, we've already got some wicks. Everybody who enters here is chasing this trade. And you could miss out on 20 billion thousand points. But if we enter right here, we're chasing this trade. So it could drop 20 billion bajillion life-changing points. But if we enter here, we are not a trader. We're a gambler. That's not a rule-based entry. So I don't know when you asked that, but there's your answer.
NAS is starting to push down.
Let's take a look. 1 minute time frame. We're breaking below. So we don't want to trade this correlated, but we've got a ton of vectoring. Odds are you'll get your 100-ish pips out of this. We need to close below this 50 for me to say that I would take it. And again, this is with the trend, so it's not the end of the world unsafe. So that's what I'd be looking for. And on the higher time frame, this is still seller's territory. It's seller's territory, so you're with the trend. But I would be taking an entry in and around here.
We have been 50 reactive, however.
Hi, good morning, Jenny. It looks like S&P 500 is making the move to the downside. On the 1 minute, it broke and retested.
Can you say that again for me?
S&P 500 on the 1 minute, it broke and retested, and it's going down.
And it's moving down now. So any of these sells are safe. I mean, the only one that we haven't happened yet would be this one. So we've got the close. If we want to take that, you can also take one at the break of this fractal.
S&P is very close to structure, however.
So I'm in this trade. I'm in NAS, guys. NAS is the only one now that it looks reasonably safe with enough room. Everything else I've already moved. And it's going to get like this probably for a few weeks. So probably for a few weeks. Oh, man. And now we're wicking up, but I'm in it. So no guarantees. My job now is to say, if I don't break above this vectoring, I'm going to stay in it. So the wick we can't control. I can't control what this market does. I might have to let it play out, hoping it doesn't make a higher high. But that's what I'm doing for right now, is holding this trade. I entered it on my phone, actually, so I could not mess. Because if I move my mouse over, then I somehow lose control of this screen, which is really silly. Very, very silly. Okay. Well, that's what we're waiting on. I'm in NAS. I'm in profit now. NAS is the only, so I'm going to pop up one time frame now. So let's take.
S&P is pushing hard, just about hit its average daily range.
Here we go. So on this one, guys, let's see if we can't hold that. And that's a lot to hold. And I can't promise that it works out. I can't promise we'll continue to make lower lows. I can't promise anything. But let's see if we can't let this play out and give us even half of the amount of pips that I don't want to go measure those other pairs. Hold on. From on my other screen, but half of the amount of pips that we saw on German 30 even. I'll take that. I'll take half of the amount of pips we saw on German 30. And German 30 doesn't move too much. All right, I'm waiting. Is anybody else in NAS? 730 just made a lower low.
I'm with you, Jenny,
Okay.
all the way.
Okay, awesome. That's a good way.
Jenny, I'm in here with you too, sister.
Okay, awesome, Mike. I'm good. I'm glad to hear it. This way I know what we're doing.
But I can't swim.
Jonas, hi. Okay, awesome. Guys, these pairs are dropping. I wonder what it's going to take to move it. I wonder what's going to happen with the election. I'm so excited, but terrified at the same time. Excited but terrified.
I can tell you.
Hey, what's going to happen, Derek? Politically, by side.
I don't know.
Well, these calls are recorded for future purposes and harassment, obviously. So it's okay if you have a prediction. By all means, tell us what you think is going to happen with the market or the election. I'm all for those kinds of conversations. I love it.
I think we're going to have a market reaction like how we did with Brexit. Well, I don't know if it's going to be that big. Brexit was like, oh my God, that was an underwear changing moment.
Yeah.
Market dropped like crazy on the day he announced the day I think he was released from the hospital. So it's kind of, you think something's going to pop off pretty big for that.
So does somebody want to school me and tell me, so on the 3rd is election day. When are all the votes final? So when, that doesn't happen till like 8 p.m. Eastern time or something, right? Where they finally have all the electoral votes in, and this year they mailed a lot of ballots. So when are we going to have?
They won't call it until enough votes are counted from the Western states. It could be very late, depending how close things are. If they see the electoral votes tied up, all figured out from the Eastern states, they would call it early. But, with California as one of the highest electoral count states, they can't call until all votes are in.
Or they called it who reaches 270, right?
Uh-huh.
Yes. It's going to be, and no one really knows what's going to happen.
There was a case years ago. I forget exactly how far ago that was. There was a big headline in the morning newspaper that said that the wrong guy won.
Wow.
Because the delay time between
You mean Trump didn't win? Oh my God.
That was Dewey versus Truman, I think.
Yeah.
Wow.
My history teacher would be proud.
That's a long time ago. That's before I was born.
Whatever, really? How old are you? Well, I know that was before I was born, I'm pretty sure. So.
Let's see. Would that have been 46?
That was
No,
before, that was before my mother was born, so we're all on the same page.
Would have been 48.
Yeah, before my mother was born.
My mom was only 2.
See?
We're going to tell her that you said that.
I know. Okay, guys. Well, I don't know what your plans are for next week. I think instead of doing a beginner's class, I would love to do a class where we kind of hang out, maybe on Zoom on Tuesday night if y'all got nothing better to do. I will Zoom in just kind of this format where we hang out and watch the market. I'm not promising to take any trade. I will not dare be that stupid. If I took a trade, I don't even know I would acknowledge taking it live. I might say, I'm going to do this, please don't follow. But I don't know. It would be fun to hang out and just watch the market move all night. I'm wondering if it's going to do this all night, That's what I'm really wondering, but we'll see. I'm super curious. What pair do you think would be the most advantageous to have up that night?
Jenny, I was wondering if we could do it all week, just maybe on some days for a short time, but just speak all week, let's hold hands all week.
Poor Jenny.
Hold hands.
Jenny has nothing else to do.
First off, I'm going to acknowledge I need to work on getting a better life out of the house. COVID is not helping. Having said that, I don't mind. I mean, as long as you guys are talking and hanging out, like I don't care if you're holding other conversations and somebody starts talking about President Truman. I mean, I can't talk for 50 hours a week, but I can definitely host the Zoom and like just let's watch the chart, go get your coffee. No one's obligated to hang out. Go get your Chick-fil-A, or maybe, Barbara's husband, I guess, is an amazing cook. So maybe she can send us a picture of her amazing dinner.
Yes.
And whatever, just share life. I'm all for that. So just
Yeah, we're gonna have her have them Uber some food up to Oakland.
she's gonna have to. I mean, I'm gonna need evidence of this food. So, right? I'm just saying. I know Scott cooks too for Wendy all the time. All these men who cook.
Well, all these guys. If I could fight, I'd beat them up. But since I won't, since I can't, I'll just shut up. All these
Hey,
guys.
did you see the spike, Jenny, in Nas?
I'm watching it. Well, we have no control over this, guys. So if it makes it,
Mhm.
we even get a spring, as Scott would call it. We could get the spring above this. Anything goes at this point. But for now, I'm in my trade. I did not protect it, and I'm going to continue to be in my trade. So that's it. I mean, you can put your stop loss here. So let's talk about your options. And I'm not supposed to say you at all, ever, I guess, which is like really hard to have conversations without saying that. But
It's the generic.
If I were to have an option, it would be.
yeah. So if I were to have some possible thought processes, I am not that great at being politically correct. So bear with me. Let me practice on you guys. You practice on me. So this, you could put a stop loss here, but you have a very high likelihood of it getting tapped. And then of course it bounces down anyways, right? Because you're kind of trading in this zone already. You can also say, hey, I'm going to trust this a little bit further. It's a seller's market, and we can put it up here. But now we've got a really big stop loss. So anything we decide to do from here is totally personal decision. When it pops in a profit, you decide that we can decide that we want to just protect it and we don't want to take the risk today. It's not worth the risk. And that's okay too. I mean, we don't get to decide for each other. We have to decide for ourselves. So having said that, your safest stop loss is probably, the safest stop loss is probably up here. We want to give it some room to just play around and see what it's going to do. We could get the spring above, because this is, we broke up here, we broke down, we retested it, we came down, we failed to break through. We can come back up before we drop. Now, I could be wrong, but I do feel like this has some potential to drop. Now, when it decides to do that, I don't know. Now, so following suit on the other indices, such as German 30 and US 30, we got a heavy drop before we got the push. We didn't get the same heavy drop lower low on this pair. So we can't trade correlatedly, with thinking that everything's correlated, because it is not. And I find that to be a pretty foolish idea. But having said that, I do feel like this still has some decent potential to push down. No guarantees. They can do anything. With the COVID vaccine thing, you could have an announcement right now we don't even know about. So anything could be happening.
Yeah, we don't control the market. We don't have enough money. We don't have a few hundred million.
Jenny, did your mic go into Mac mode?
Do you not hear me?
It's lower, than earlier.
I could scream at you, Derek.
Oh, there you go.
Okay, let me get it a little closer to my mouth. Hold on. If I turn my head away, it doesn't record the same, but yeah.
Blame that on Scott. He wanted direct instead of omni.
Oh, well, I don't know the difference. I just know the gentleman on this call picked it out, and I find that it works phenomenal. I'm not too picky. I don't value stuff as much as many, so don't value stuff too much.
But it was a wise decision on his part.
Right?
I agree with him with that one.
Okay, see, I agree. Guys, once we're in a trade, especially in this crazy time, you've got a few options. If you can't sit here and lean in to the discomfort, which was some audio I shared a while back, learning to lean in and say, okay, well, I could lose this trade, I could win this trade, but it's not going to break my week. And it shouldn't, in theory, break your week unless you're trading tiny accounts or you're over leveraging. You can afford even 20% losses. And in some cases, depending on your risk management, you can afford 30-40% losses. So it's not a big deal. The whole idea here is to say, okay, I'm going to trust this and I'm going to let this play out. And if you need the safest exit and you don't have the tolerance, right now it's looking like the 3 is trying to cross this 50. So let's zoom in a little bit. The 3 is the magenta. So the 3 is looking like it's trying to cross. It hasn't crossed yet. It's not looking like it wants to close. But we can say, hey, I want the tighter stop. I'm not even going to give it room. I can always get back in if I get another signal, but I want a tight stop. You can do that. You don't have to risk your whole account. So we don't have to risk our whole account. We have options.
You can also read.
Yeah, that's why I like these classes.
Brian, is that you with the noisy mic?
I just muted him.
Okay. So if you look at how the candles are forming, we've got a low, higher low, higher low. We made a higher high moving up, and now we're about to break a higher high. This is giving us upper momentum. We're making higher highs and higher lows.
2 minutes and 50 seconds on this candle. I see it happening. I do. And we're above. See, the fast MACD is above the 0 line. We retested it for the continuation. So that's what we're seeing. So the decisions we make, guys, are up to us. The 3 is officially crossed the 50. If we want the tighter enter, we don't want to wait for it to hit a stop loss. We can get out. We can say, hey, we've got 2 minutes on this candle. It could just wick and wait for the candle to close to see what happens. So the decisions we make at this point are 1,000% up to us.
And we look here, we did get rejection off of that zone once. We can get rejection again, but we're getting pressure moving up.
Yeah, but remember which one of these is opening candle too. So we have to bear that in mind. This one's opening candle.
Yeah.
So opening candle, gave it all back. Now we're pushing. It's trading, so that's it. I'm hoping it wicks to the top side, but we have got no guarantees. German 30 made a lower low, and then it pushed back. It gave it all back, every ounce of it. So all of it moved back. US 30 made a lower low, and again gave it all back. NAS has not made a lower low yet, so we don't want to trade them like they're correlated, but just something to keep in mind.
Same thing with the SP 500. It made the move and gave it right back.
Let's see. So we did make the lower low, and it's given it back. So I'm holding. This is what my thought process is. You guys can hopefully learn from that, the good and the bad. You can say, hey, I like that she does this, or I hate that she does that. I see things this way. I don't agree with her on this. That's totally fine. That's the whole concept of learning and growing together. But for me, what I'm seeing is this one has yet to make a lower low. So I'm trying to be a little bit more steady in terms of not overprotecting you guys, because I think I was on the phone with Miss Donna actually, and I told her that, all this, wanting to grow, it was after that whole 100 classes. And I said, I want to do better and I want to provide better. And of course, Uncle P had asked, to make sure the value in the group and everything and what have you. So long story short-ish, my way, I don't want to teach you guys to overprotect because I'm emotional for you, because that's a lot of emotional pressure, right, for me to face. I want to teach you guys the way I trade and let you witness that. So that means win, lose, or draw. That means the times that I am wrong. I want you to see the real how I'm wrong, because if I come in here and try to helicopter mom you, right? We all know what that means. Hopefully you guys know what that means, that overprotective kind of spirit. I'm going to fail you as a coach and I'm going to fail you as a teacher. So whereas, yes, I'm big on the protection, and I got more, big on the protection as I had to speak about it live. But ultimately, I don't trade over protected. Like I do protect, but I don't, my psychology behind it is different. So teaching you guys in a helicopter mom fashion will ultimately fail you, I think, long term. So you can see what I do right, what I do wrong, when I'm right, when I'm wrong. But I'd rather do it from a very stable and consistent mindset that says, whether or not I'm wrong, I want to have some room. Whether or not I'm wrong, I want to see this play out. This is my reasons. We do have a double bottom here, different than the other pairs. I mean, so we've got some other variables, but that's my choice. And hopefully I can let that come across really well. So long story-ish, kind of ish.
Appreciate you.
So let's pop to the smaller time frame. We've already busted that high, and it busted pretty hard. So That's no bueno. No bueno at all. Zoom out, smaller time frame. Come back in. This one might be a loss. It's looking like it. So well, this one will have to count as a loss. So unfortunately, but that's trading. So we'll count it as a loss and take a look at some other pairs. If you're still in it, you can decide to stay in it. The odds are, like any other trading range, it's going to come back a little bit. So you can take a slightly smaller loss when it pulls back down versus taking a fear-based loss, which is taking the whole loss, right? That's another concept that I would hope that you guys start to grasp is the concept of a stop loss means you take the whole loss versus, hey, it hits this zone. When it pulls back, I'll take a slightly smaller loss. Same thing with the take profit. When you protect 5 pips and then it comes back and knocks you out with 5 pips, rather than just having a safe 10 pip take profit, you don't take the full take profit. You take the baby take profit. So kind of the exact opposite in terms of the way you protect and the way you use a stop loss. So, and that exit manager is really, really good for that on the ATM because it's only counting on a closed candle. So when you see that wick at a certain level, you can say, hey, I'm going to wait for it to pull back a little bit and take a smaller loss. My entry is no longer valid. So, okay. I'm going to have to go with the entry is no longer valid on this one. So the 3 crossed the 50. We even crossed the other 50. This is the 5-minute time frame. We haven't broken these highs. We've got one more, baby zone here, but it's pushing up. So we can't argue with what the chart is doing. We've got these little areas that we can say, hey, if it breaks this, but we can do that all day long. And that's just not a safe way to be. So sorry, guys. I haven't called a lot of losing trades, but that's a losing trade. That's a losing trade for sure. So now we'll
Thanks
have to
for putting yourself out there.
That's not
I know
easy.
a lot of people are scared to, yeah, it's not easy.
Oh, it's so hard.
Thanks for putting yourself out there. Hey, look, we in here together, sister. You fist bump. Let's go.
Okay, I'll take that fist bump. Thank you, Mike. Honestly, you got so many brownie points because it is not easy. You are totally right. No one wants to fail somebody. No one wants to let somebody down.
I think that you do teach really good lessons about that, though, because one of the things that you said these past 2 weeks that I really was holding on to was when you said, sometimes you fail like 6 times in a row, and then you're so scared that you don't try again. And then the 7th, 8th, 9th, 10th time is when you would have succeeded and made money. So this past 2 weeks, I think, have been kind of like that for me, where I've been like, okay, I've gotten it in and I've had really, really good run. And then I've had a bad run. And, there's that moment where you're like, all right, you should stop now. You should walk away. You should just quit for the week or whatever. And I tried to hold on to that lesson and it worked out really well. And I made my money back.
That's awesome. That's the kind of story I love. So that is awesome. That is because, that first off, that came from the book, Trading in the Zone, and it's mathematical. So we can all talk about theory and feelings and all this other nonsense all day long. But if we start to put certain things into practice, we can actually evolve. So take that and put it into practice, that concept of, okay, so you're going to have a few of these choppy moments, but learning to catch more of this move will pay for all of that. Plus your mortgage for the month, if you're trading, in a good way, and you have solid, sound, consistent rules. But if we trade with emotion, then it's never going to work. So like learning to hold this move, like I wish I could say the fast MACD stayed above the whole time, but it didn't. And we can call that the choppy market. But you can also say we never changed bias to sell until here. So the bias never changed to a sell until here. So you have a really good reason to stay in this trade this whole time. And then the second thing, this is based off of a current, not current next higher. But if you took this 3 and 50 cross, for example, like notice the slow MACD stays above the entire time and doesn't cross below until here. That slow MACD would be comparable to having a slower or like the original MACD on here. It'll help you stay in the trade. This area we get chopped up. I mean, there's no getting out of it. It's just real life, unfortunately. But again, we take this trade. You either A, hit your 50 pip target or 500 pip target, or B, you're holding that trade until your bias changes in and around here, your fast MACD. Whereas I'd rather just hit my target and move on with my day. Okay, well, that stunk, but that's life. I'm taking a look at some other pairs. I still don't love this for the buys. I still love most of this for the sells. To consider a buy, we would, unless you're just trading that instant time frame like US 30, we need more of a breakout move. We need a big move and a retest before we say, hey, this is really safe to buy, which we might get it. I don't know if we're going to get it in the next hour, but we might get it. We definitely have some, stalling out happening as comparison like to the rest of the move. So this is all perfect and smooth down. Price is stopping here, but price stopped here, came back, played around, and dropped again. Price stopped here, came back, played around. It could drop again, or we can get the reversal. See how the price is moving. So just to clarify, before I took a buy, whoever is fiddling on their phone, shh. I don't know who that is. I'm going to mute people. I'm like, shh. If you're talking, you can unmute yourself. But if you're not talking, shh. So for me to consider buy, guys, here's what I'm looking for. I'm waiting for the 3 to cross the 50 on the 15-minute time frame. So the 3 needs to cross the 50 on the 15-minute time frame. It happened here, but we never really got the retest to continue. And it's looking like we could get it here. That's on this time, on that pair. This pair, comparable story. I'm looking for the 3 to cross the 50 on the 15-minute time frame. Oopsie. It's looking like we could get that, but again, we want the retest. So NAS, what a pain in the butt. Try to go with the trend. So 15-minute time frame, it is already happening. And in this case, we're actually breaking above this zone. So if we break above and we retest, you've got a really safe amount of pips. You gain back the pips you lost, and odds are you'll close above break even. So that's what we'd want to happen if we wait for the breakout and the retest. Again, this looks like the best setup, but it's pretty messy. On US 30, on the other hand, this one I'm not looking at the 15 as heavily because it just moves way too much for me to be only paying attention to the 15. If we are breaking above this zone, I want to wait for the retest and then take it to the upside. If we're going to the upside, we may as well get a little bit of pips. And on these moves that are counter trend, I will overprotect. Anything else, I'm trying not to protect so much and not to teach you guys to protect so much, because ultimately that is not helping you. It's making you get baby wins and full losses. So, any questions on any of that I said? Only anybody at all? What a pain.
No, I'm just soaking up the knowledge. There was as a trader who's been trading for a couple of years, I have been in situations where I've been up double, triple digits, a couple $100, then I come back and I look, and I'm only like $15, and then I snatch my $15, and then it goes back exactly in the direction that I had going in the first place. You know what I mean? So it's also being patient and stuff too. And taking those baby losses is baby steps. It can get discouraging.
Yeah, I taking the smaller losses, I think, is important, or deciding which kind of trader you want to be. If you want to be like the rule-based exit, saying, hey, I'll get out if we recross the 50, you have to have the kind of personality that doesn't get easily self-conscious. I think I'm going to take it off of trading and turn it into personal. Like, so if you want to be the kind of person who says, I'm going to get back out if the 3 crosses the 50, that strategy actually is reasonably sound and it will work for the most part, as long as your feelings don't get in the way. So if you're the kind of person who takes a loss and feels like I'm an idiot, and let's just talk about all that negative self-talk for a minute, or what was I thinking, or what's wrong with me? How come I can't get it? And I never succeed, and and all that stuff comes in your mind, then you should not trade that way. If you're the kind of trader that says, I can handle 15 losses and I can do this for 50 trades or 100 trades, and I don't care how many of them are losses or wins, and you're very strategic. You don't let a lot of things get in your feels to make you feel self-conscious. And I'm going to totally keep that on the personal side, not the trading side. And you'll know that about yourself in other areas of your life. So you have to know yourself. Then your best bet is to trade and say, hey, my stop loss is at or above structure. And I'm going to hold this and catch the move. If it breaks structure, that's fine. But that is my opinion on what I think for myself. Like, so when I had to figure out which trading style for what plan, for what strategy worked best, that's been my experience to figure that out.
Jenny, I have a question.
Knowing what your edge is.
Tiraco first, and then Scott can talk about edge.
Just for clarification on that NAS, did you allow it to play out or you closed it out as a loss?
I haven't closed it yet. So I haven't closed mine yet, and here's why. So I put my stop loss up here. So as I talk to you guys, again, I've started to try to teach you to be overprotective, and I think that was wrong with me because I do want you to protect, but not on the account of helping my feelings. So having said that, my stop loss is above here. We haven't closed that. Now, if, for example, we got this wick and we started pulling back down, I would have started pulling my stop loss in to take a smaller loss, okay, and kind of done it that way. But notice how we didn't have that happen.
Right.
So the difference in here to here. So I'm not going to get my measuring tool to show you, but the difference in here to here isn't huge. The difference in, by the time we started breaking above and talking about it and saying, well, hey, we are clearing highs, this difference isn't worth my mental and emotional energy.
Okay.
So I'll pay the price. Basically, I'm saying I'm willing to pay this price, and that's my mindset. Now, not everybody has that. I will tell you that if I was, if this had got this wick and we started pulling down, the difference in this price to this price is enough for me to say, I'm going to save some money. Okay, I'll take a loss, but it's going to be a little bit smaller. Don't like what it's doing. And I would just start scooting it up. And if it works out great, I would either take a very small loss or even potentially a baby win. If it works out poorly, obviously, then, it just comes and wicks me up, but it's a slightly smaller loss. So if I'm micromanaging my trades, that's how I'm micromanaging it is I have to calculate the risk, and there's always something to gain, right? And I had that conversation with my oldest son last night about a project car. He wants to soup up this car, blah, blah, blah. So long story short-ish, I don't mind this being a big risk. I can handle that mentally and emotionally as long as there's something to gain. And I don't mind adjusting my risk if there's something to gain. But in this case, adjusting it just to feel a little better and saying, okay, I'm out because I can't tolerate it is silly. This isn't a big enough difference for me to say it's worth my weight in gold.
Okay.
So just to tell you what I would do if I was no longer sure of my analysis and saying that this is no longer valid, then I would be scooting it down with me. But this isn't enough. So nothing happened for me to start scooting it down. And for now, I'll take my full stop, or it'll come back down, one or the other.
Gotcha. Thank you.
You're welcome. So I don't know. I like how the other ones made lower lows, but this one, in all fairness, had kind of a different double bottom than German 30 and US 30. So we could very easily not make that lower low. I mean, that's possible too. We have no way to know.
So going back to edge.
Okay.
It was a minor point, but it's possible that people don't even understand what edge is. So edge is what in your trading strategy is giving you enough advantage of wins over losses that it's worth doing. And you need to understand where that edge comes from. And the way you do that is by going back and back testing. I would take this entry and this is what happens. Does it play, how much does it play against me? How much does it go for me before I win or lose? And, you start to get a feel for what price structure is doing with the strategy that you're trading. And for you to hold through a large stop loss, the kind of structural stop loss that Jenny's working with right now, you need to understand the percentage of times that that's going to play out as a loss and the number of times that that's going to come back and play out as a win. And understand the size that the win needs to be to overcome those big losses. It needs to all add up. So it's how many times do you win versus how many times do you lose versus how big is your average win and how big is your average loss. It has to work out mathematically. And for you to hold through that and trust it to happen, you really, you need to have a good feel for what your edge is. And, you can't cut your winners short if you know what your average winner needs to be. And you can't, you can't let your stop loss run bigger than you're expecting to.
I'll piggyback on that for a second. So I don't lose a whole bunch. So most of my losses are either, I got out because I didn't like the 3 and the 50 kind of thing. So they're what I would call break even losses. So if it's only a handful of pips in favor or against, I don't even put that on my trade as much. So my win to loss ratio is really high. So I can afford a loss every now and then. And yesterday, not in one trade, but accumulatively, I got so many thousands of pips, it's not even funny. So I can afford this stop loss. But I'm going to talk about what Scott just said in terms of the edge. So does anybody know what their edge is? Can anybody tell me what their edge is? What your edge is currently, or what you think it could be as you become a better trader? Like just knowing yourself and knowing your trades. And anybody at all?
Moving to Southeast Asia, enter in on the London market while it's in the afternoon for me, and just catching it and letting it ride. Okay. That's got to be my edge, because I back test and I look and it's like, it's scary. It's so
life-changing.
Unbelievable. Yeah, it's scary.
Well, don't be intimidated by it, but I know
I'm not intimidated. I mean, in a good way. I love the thrill.
Yeah, no.
It's just like, wow, is it real? I have to check my eyes over and over again. And the setup that I have is just, man, it's beautiful.
Well, that's first off, Derek, that's awesome. Second off, I definitely can concur, because moving across the country did, factor into my edge quite exponentially, actually, because I was no longer sleep deprived trying to catch these baby moves at all the times when I was never free. So it's middle of the night, I'm sleeping, early morning when I'm supposed to be dealing with my kids. And then I'm failing at everything. I was succeeding, and I'm still getting breakfast for the kids, and I'm still trading, and I'm still doing this, but I'm just running around like a chicken with my head cut off. Whereas here it's way different. So I definitely,
and imagine I'm in California, so even further behind. Exactly. You got it right away.
You're way off.
I don't know how Scott does it.
I don't know how Scott does it either. Like
he got that Superman suit on,
He does. I don't.
We get a respite here next week. We'll only be 2 hours off of Eastern, because we don't change.
Oh, you get 2 weeks. I hope you enjoy that 2 weeks of sleep you're getting.
It's we get an hour, and it'll last all winter.
Oh, there you go.
We don't do daylight savings time in Arizona.
Oh, there you go. Okay, so two things. I'm going to piggyback off of what Scott said in the whole edge. I was dealing with this trader, worked on Wall Street, has all the licenses, 20-year trader, And we were talking, and his definition was, if you can't explain it, he had found it from a book or something, or an audio, I think. But he said, if you can't explain your edge in an elevator ride, then you don't have an edge. So if you don't know what sets you apart as a trader, then you don't have an edge. If you can't explain it in an elevator ride up, so within minutes or less, Lord knows I need work on that. But on this topic, I actually can explain my edge in a few minutes or less. And I can deadly say that I know what it is, and I know the difference in terms of how I trade. So you guys should definitely consider working on what can be your edge, and then back test it, improve it with your entries, improve it with your forward thinking and your hindsight, and make it come to pass. So, but now let's take a look at this trade real quick. As we're pushing down, we're retesting this next zone. Oh, don't do that, silly. Come on. It's doing it again. No idea why it does it either. Just, I lose control of the window that Zoom is controlling for some reason. So now as we push down a little bit, we're rejecting off of that zone. So I will now move my stop loss up, okay? And protect just slightly more. So if I get knocked out, so be it, because we did already reject off the zone. So now I'm starting to get enough that it's worth protecting. But otherwise, I'm still hoping that this continues to the downside. And if I'm wrong, I'm wrong. I'm going to have to pay the price. But I don't have to do that as of yet, because we still have yet to break out of this really ugly zone. So let me make it a little bit more zoomed in. This zone that we have all the way from over here, we just haven't broke it yet. Doesn't mean we won't, and doesn't mean we can't. It just means we haven't as of yet. So it looks to be pushing down on the 1 minute, and I'm gonna have to go play on this other chart, but yeah, it's not bad at all. So we'll see. It'll probably continue to the upside, unfortunately, which would give us an ideal entry on the 1 minute time frame if the fast MACD crosses above the 0 for a short buy. But otherwise, it is what it is. So for me, who's still holding, I'm just going to keep moving it down on the 1 minute time frame and see if I can't take a slightly smaller loss now. Because I'll save, what is 300 pips, give or take. So I can take that. That's fine. So, all right. Anyways, that's trading for you. You have to have some days that are like that.
I'm still with you, Jenny. I'm still with you.
Okay, good, Ben. Thank you. See, I need to hear that sometimes. I get to be up here talking all day, so that's nice to hear. Kind of like having you around, Ben. Just so you know.
Let's do it.
Amen. All right, guys. Well, maybe we'll pop on a couple of times next week. I'm really curious about what's going to happen in the market. And as for right now, you know what we're looking for buys on German 30, which is a counter trend trade. That's counter trend. You know what we're looking for on US 30. You can scalp US 30 on the 1 minute. Pretty easy. Not hard at all. So
And by the
definitely.
way, I've been noticing lately that in Asian session, the Aussie 200 moves very smooth and the spreads tighten right up.
Really?
Yeah.
What's the ATR on that?
It's around 1,000 pips, I think. The ADR, you mean?
ADR. Yes, sir. That is correct. That's what I mean.
The last week it's been 975 pips, not points. So, you know, what is that comparable to? That's
S&P maybe?
it's bigger than the S&P.
So it's in between S&P and German 30.
Yeah. So, you know, what I'm seeing is very little gappiness during Asian. Now, the spread widens up a lot when you get out of the Australian session, because this is the Australian stock market. But on 1 minute, it looks really pretty.
Okay, now you got me curious. So let's take a look. I don't even know if I have that up here. Australian 200. I actually like US 30. Like if I want to trade it a little bit at night, which I typically don't, but go get a couple of pips. And I mean like the actual definition of scalping where you're only getting a couple of pips, like a handful.
Mm-hmm.
US 30 moves really good. There's all kinds of strategies about that too for Asian session. But thank you for the tip. So if anybody's looking to trade Asian session, they're not available for New York or London, might be something to check out. So, and if you have a bunch of wins, you get to thank Scott. And yeah.
On, you know, right now during the US session, the spread is like 41 pips, but it drops down to 10 when you get into the Australian session, like almost immediately after the open at, 5. As soon as the index starts trading. Let's see here, what time is that? Yeah, that is actually not until the Asian open, really. It's at 1:53 server time. So, after 2 server time, basically, the spreads tighten up well. I was looking at that yesterday afternoon. For me, that's starting to trade around 4 o'clock p.m.
Yeah, for you, that would be perfect. Honestly, Scott, that would be perfect.
Because I always discounted it because whenever I looked at it, the spreads were too fat.
ADX is low. Well, right now we're in New York session and we're not getting the ATR warning, so it's not too bad on the 1 minute time frame.
Yep.
ATR warning. There you go. Well, for people who live in Arizona because they're weird, like Scott or California, I mean, this might be the perfect solution because I don't know how y'all do it trying to catch New York and London. Those of you on the West Coast, it's not easy. Brian, I think that the universally agreed upon answer would be that New York has the most fluid money in the indices. because New York is the biggest stock market in the world. I think in terms of stocks. So I think that the New York market moves the most in stocks. The stocks particularly, not foreign exchange. But I mean, London moves a lot, but it moves differently. It has more volume. But
Well, Forex volume. London is over 60% of the Forex volume.
Not in the stock market volume, though. That's
Right,
most.
not stock market volume.
That's so
Now-
the indices move mostly in theory in New York than anything else. But then you have to consider, I'm not talking about the Australian index. I'm not talking about the Hong Kong index. I'm talking about US 30, German, well, maybe German 30, but NAS 100, anything US based really. All right, I'm out on that NAS trade, so I took my loss. I'm out, which was out slightly before where the high was. Slightly before, but that sucks. It is what it is. Moving forward, we're breaking above. We want to wait for the retest. You can take it. I just got an alert from TradingView saying the 8 crossed the 50. So that's kind of the confirmed. I'll move back over. This is a 5-minute time frame. That's the 15. This is the 8. So that means we've already retested. So this was when the 3 crossed. This was the retest. This is when the 8 crossed. There you go. Wow, that's late. I just got that alert. Just right now. That's way late. Okay, well, the buys are looking good. I'm not going to take or call another trade, but the buys are looking good for those of you who know the strategy. If I take a loss, so that's big. That is that big. I'm done. So I am definitely done. So that's kind of just trading for you, knowing when to not to trade.
And remember that you've got 2 types of capital when you're trading. You have financial capital and you've got emotional capital. Sometimes when you take a big loss, you need to go away and recoup your emotional capital.
I think that's honestly, Scott, I think the emotional capital taking a loss like on a live call is different. Like, so if I took a loss and I was talking to my mother or my girlfriend or something, like it's not a huge deal. It's part of my quote unquote job or my business. But when I take a loss live, the emotional capital is too high. Then that means I know I might put in a pending order for a buy on US 30 and German 30, but that means I know I'm walking away. My ATM will manage it and I won't look at the charts for the rest of the day. Even with the election and stuff, I won't, because it's the emotional capital. It's not the money comes and goes. Like some of these people are making hand over fist money. Like it's insane, like life-changing money. But that comes and goes. It's just money. The emotional stuff matters a lot.
You have to remember the type of market that, this strategy works well in. This, you kill it. This, you get killed. And sometimes it's a question of how well are you reading the market for what it is today? And if you are getting, more than X, whatever you want to call X losses in a day, then you hang it up, especially if it's losses in a row. If you're getting a loss and a win and a loss and a win, and your wins are outstripping your losses, great, keep going. But if you start to get, where it's just not working for you, then the market is not agreeing with your strategy.
Well, looky. Well, I defend this to the tooth only because I know it so well, but like this right here, we're not taking this. The next candle's not making higher highs, and you've got all these wicks. This one right here is with the trend. The fast MACD doesn't cross below until here, so you're not taking it because that's retesting here, right? By the time you get to this candle, you've got a lot of wicks, but the difference in this one, when you measure to the left, you've got enough room, and your fast MACD is above, and the ADX is already kind of retested and has power. I would take this. This one I can't say because the 3 doesn't cross until this candle, right? Which you're at structure. So this one would probably win, but I wouldn't take it. Like just following my rules. No arrows, my rules. Just my rules. This 3 and 50 cross. Sorry, it's moving around. Doesn't cross till here. Those huge wicks, this big wick has me out. I'm not playing against that big wick. I would have to wait for a close above and a retest before I mess with this big wick. So I'm not taking this one. I would miss a winning trade. So I want you to know like when I would miss a winning trade. And this is a higher time frame, granted, but same concept.
Clarify for everybody. Notice that her bias is the next higher time frame on this. So she's talking about single time frame crosses.
Yes. Yeah. Single time frame crosses.
So, you know, if you're looking at the bias line on the indicator that's running across the center here, that is, you know, don't pay attention to that as she's talking about it. Look at the chart.
Wait a minute. I'm trying to figure out what you.
Well, it's because you're taking trades during neutral periods and you're taking bullish trades during.
Yeah, no, I'm discussing single time frame entry only.
Yeah. So I'm just telling people don't get confused by the MACD in this particular case.
Okay.
If she draws your attention to the fast MACD line, yes, pay attention to that.
Just the histogram, not the rest.
Right. Right.
Just knowing that, okay, the histogram wasn't which one was it? The histogram wasn't ready on one of those. The histogram itself wasn't coming down yet. So that's just how I see it. And this is a bigger time frame. So remember, I'm getting alerts based off of this stuff. So by the time I get the alert, if I have room to the zone, I'll take it. But if not, like it has to match my rules and it's pretty quick. The fast MACD has to be below. I need to have momentum. I mean, I'd like to see not a bunch of competing wicks to the left, and it has to have room. But that next candle needs to start moving in my favor, or the next few. Like, so depending on what this looks like, I mean, I don't need the exact next candle. There is some room for error there, or some room for, 4 + 4 is 8 + 1.5. But in general, it should be the next candle that's making the higher high, or it's not ready yet. So you can go down a time frame and wait for a re-entry, but otherwise on that time frame, it's not ready. And when you trade like that, you're not taking a boatload of losses. You know exactly what you're doing. And as Scott had mentioned a few weeks ago, and that I don't go over enough what I see and what I don't see. So if I can start explaining a little better which one of these signals I'm taking and why, which one I'm ignoring and why, I think you'll be able to handle even this choppy kind of day. And you can't win all the time. You're going to have some losses. It's part of life, but you'll avoid most losses with sound rules. Now to program that into a bot, a whole other story, because all those human variables. I don't know how to program my human variables into a bot. See, Tammy, you're my superhero. Thank you.
Depending on the human variables involved, you might not want to.
Well, with me, they want to. They really want to. I don't know how to put human into bot.
That would be an expensive bot, Jenny.
Yeah, and that's another thing. I also don't, even if I did decide to work with that company, I don't want to overcharge for it. I don't want to do that. I don't want to be that. I am a capitalist in terms of like affiliate marketing. I am a businesswoman, but like most of us traders, that's not what I want to do it for. I want to do it for the purpose of making a difference. And yes, it has to have a value. Yes, there's a lot of manpower and tech behind it. And that's fair. I don't want it to be only just free, if I did decide to do this with that company. But I also don't want to overcharge because they want to decide the value is some extreme amount. And that's phenomenal. That's great. That's for them. That's awesome. But for the people, that's not great because they're already going to come in. They're going to have a few $100s in their account. And I'd want them to be able to learn to use it versus, you know what I'm saying? I don't want to overcharge for it. I get it has to have a value. It's business. I just don't think it should be out of people's price range who are just trying to get ahead in life. So.
Yeah. If I could have did it over, I would have bought a Lambo for the bots I bought.
Hey, Derek, I've got a couple on my screen right now. A couple of pretty good bots. And I've got an offer, just to be clear, guys, a really big offer, a couple big companies actually to do some really awesome things. I just don't know if it lines up with who I am and who I want to be. So I love coaching people. I love talking and mostly stuff like this. I don't have any interest in being a guru, but I also don't have any interest in marketing at all. I don't need to anymore. So.
And you know how great mine was when I gave it to you, but the year before it was like knocking them out the box, home runs. And a year later, it became, like our president says, a loser.
Okay. Well, I have no problem showing it to you. I think the the inhuman aspect of this works phenomenally, from what I can see. And like once you understood, like it's the only bot I've ever been able to play with that makes sense because it follows rules. So like it follows actual rules. So we'll see how it plays out and what it does. And I've got it running on a couple of accounts and I'm excited, and I'm considering, I don't know, I like Scott a lot better. Scott's I'll talk to Scott about maybe seeing if he wants to help me build a bot. Because it would be a brainchild for sure. Just you guys hear him talk, you hear me talk.
You're just gonna put him on blast.
I'll talk to Scott. Well, no, we've talked about it, so I'm not putting him on blast. I don't know.
I know I'm just teasing.
I don't know how I feel about it because the human part is it's integral. It's integral to some of the things that I do, and if I can duplicate that result and help somebody, and maybe they don't need to make 20% and they don't need to make six figures, but if they just made $1,000 a month, a few thousand a month,
that could be life changing for a lot of people.
Yeah, I mean, seriously, there's so many people struggling, and it's only going to get a little harder. So,
I mean, before
if there's anybody,
go ahead. I'm sorry.
No, I was just gonna say, if there's anybody who can understand Jenny, it's definitely Scott. So that's a good team right there.
I know her kids are happy when Scott talks to her.
Just a little pop-up that comes on the bot that's like, go get your coffee.
That would be awesome. Hey, Scott, did you hear that compliment? That was pretty awesome.
And we can't forget about Donna.
Pop up that says, "Stop watching me."
Hey guys, really quick, there's a lady and I want to make sure she doesn't need anything important. Yeah, I'm not. She's probably just a salesperson. I was like, there's somebody at my door, but I don't know her. Yeah, she's walking around with flyers. We're good. Sorry.
During this time, you can ignore anyone at your door. Like, if you're on fire at my door, I'm just gonna wave you towards the hose.
Oh, that's really mean. That is so mean.
But you might get
and cat. Hey.
Person.
Okay, if you're on fire, I'm literally calling 911 on my way out to grab the hose. I don't care if it puts me at risk. Like, I don't think I could live with myself if I didn't do that. Like, again, you have to outweigh that stuff. Like, could you actually kill somebody? Like, let's say the worst extreme things were happening in your world. Could you pull the trigger? If you've ever like done any of that sort of thing, I don't know that I could. Like, I don't know the situation or how extreme it would have to be for me to know I could live with that decision. Because I'm just not wired that way. Like, okay, well, God's got a plan. So I don't know how else to say that. I think that's how I'm wired. I don't know why, but I'm definitely coming out if you're on fire. Okay. Telling you now. I'm just saying.
Okay, Saint Jenny, we got it.
I'm not a saint. I mess up every day. I don't think I could live with myself because I have to live with myself with the decisions I make.
That's true. Very true.
I do. All right, guys. Well, are there any other questions, comments? Scott, anything at all you can think of? My emotional drawdown is good for the day, so I will probably put in a couple of pending orders, potentially one for a sell on NAS and a couple for a buy on the other two pairs. But other than that, I will walk away. I'll prepare for our little Halloween get together tomorrow evening, and that'll be my trading day. And that's okay some days. So we have to be as real as we can be and go from there.
Yes, Jenny, you did fantastic.
Oh, I see. I love these people. I would never want to. You guys are my people.
Thank you, Jenny.
Thank you, guys. Anybody need anything at all? Questions, comments, charts? This is your moment. It's a little bit. We usually get off.
You're good.
Thank you, Jenny. We're here.
We appreciate
Thank you, Jenny. Thank you, everyone.